What is going on, everybody? And in this video, I'm providing you a state of the market and stock picks for May 24th, 2023. So if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, as you see, we finally got some red candles today as there's been no deal, and it's been told by McCarthy that essentially it's not even close. So this whole pump the market up last week that came from Biden and Harris was essentially a fallacy in which it led to a bunch of negotiations just falling through and nothing really sticking. So with that being said, we still have about a week out before this thing could potentially crumble. But now coming towards the back half of the day, it seems like from what we're understanding is we may actually have funding beyond June, and that it's more so just trying to be painted by Yellen is June 1st is the essentially the deadline to try to pressure political parties into making a decision. But nonetheless, that's what we have is we are really moving strictly off of what is going on with the debt ceiling as of right now, at least for the next week. Now, again, if we do default, again, there's projections of the stock market could lose about 40 to 50% if that is the case. And so if we do default, it would be the first time we've ever done that, and it would get extremely nasty. But with that being said, there's still a lot of other things going on. You still have high inflation at 4.9, and you have the Fed battling inflation with more and more potentially pressing towards another 25-point basis move coming into June. So these things are, again, big concerns as we go into tomorrow, which is going to start leading into some bigger events for the remainder of the week. Now, tomorrow we have Yellen. I believe she's on the horn tomorrow, so I'm sure she'll talk about the debt ceiling. And considering that any kind of information coming from that is very sensitive, given her position, and then also, and maybe not as much as Powell per se, but nonetheless, it still holds weight, and she can cause a big move in the market. So with that being said, we will see what happens with that tomorrow. But we also got the FOMC meeting notes tomorrow, which is extremely important. I've been waiting for this for a while as the last monetary policy came out. I was waiting for Powell to essentially field a question about recession because before then, Elon Musk said we are in a mild recession, and I would believe Elon Musk much over a lot of other people as he is running multiple different companies in his front line and would be able to give you the honest answer about what inflation is really looking like. So with that being said, he said back then that it would be a 25-point basis move would absolutely just wreck the economy. And potentially now looking at another 25-point basis move coming into June. So with that being said, Powell on that last monetary policy, he dodged the question essentially and said, look at the meeting notes, you'll get your answers, which is mean opinions, because he tried to skate around the question like he didn't have an opinion about it, to briefly mention a mild recession, and that was pretty much all he did. Now, tomorrow, we're going to get the true insights, and that comes out at 2 p.m. Eastern Standard Time. So we're going to could potentially get a lot of volatility tomorrow, and could potentially make the market dive, because if there's a lot of discussion in that report about a recession, again, I don't think they're just going to say recession. It's going to say mild recession to try to soften the blow. And if that's the case, the market may start pricing in a recession tomorrow. And then be aware, Thursday morning, we have GDP for the beginning of the year. We have to understand that leading up until this core Q1, things were looking really, really bad, right? And you have to understand that the pace in which GDP was falling would essentially lead us to believe that this next GDP that comes out on Thursday is going to actually show a negative GDP. If that's the case, then we could, quote unquote, be in a recession, which could add to whatever comes from the FOMC notes. And then we got the PCE on Friday. So we got PCE data on Friday. And then not to mention the debt ceiling and the banking crisis and everything else that's currently going on. So there's a lot going on over the next couple of days. It's going to be very extreme on what's going to happen. Again, I also point to the fact that you have to also understand the whole reason the market's been pushing up is because of the weighted stocks and the momentum that those 7 stocks have had over the past couple of weeks. And it's essentially just been those couple stocks. It hasn't been anything else. Everything else has been flat or dead. And at 52-week lows, you can look at the Russell to see that. So with that being said, a very tough situation that we're going into. And then ultimately understand that after this week, um, again, we'll get some other additional information going into the next monetary policy. But again, it could start causing a cascading event. But the big thing understanding here too is that we got more mortgage information as well today. Again, very concerning. And we did have JPM CEO come on. Jamie Dimon came on just the other day, and he was talking about we could see rates up around 10% interest rates on home loans. And understand we are sitting roughly around 7 again. So you're looking about another 3% on home loans. And this is why you're seeing kind of an uptick in some housing, because people don't want to be paying 10% on home loans, especially when people are still really price gouging on houses. And this is why you're not seeing a huge supply in housing either, because people can't afford to either one, qualify for a new home, or essentially there's just no supply. But again, with the continued increase in rates, you're going to get more bank failures, which I think is going to happen after next week because, again, once this whole debt ceiling thing is done, then you're going to start throwing in the fact that there's going to be bank crisis after that. I think there are going to be more announced after that, because we did have Yellen mention yesterday or last Friday that there'll be more bank mergers, which means there's going to be more failures. And then you have for tomorrow, which I'm sure she'll drop some more gold nuggets tomorrow, mostly about the debt ceiling, but I think it's more so going to be about she might throw something in there about bank mergers, bank failures, or a thing that's going to happen. But they all like to always lead with the strong and resilient, and then they take it from there and give you all the bad news. So with that being said, Powell did also have a kind of very secretive lunch with the Democrats as well today. So be mindful of that. That did happen today. I don't believe any news came out from that specifically, but there could have been chatter or something that people don't know about. We really kind of started selling off pretty heavy around when he was talking, or it was in this quote unquote secretive luncheon or whatever he was in today. So be mindful of that. That did happen today. Like I said, we're leading into tomorrow and then leading into the rest of the week. We got some potentially very big pieces of information that can cause or put the market in panic. And so, with that being said, we'll see, right? Like we've gone many weeks without really, ever since Apple's reported, we've gone about 2 weeks with no real like impactful like data or anything like that. And that's why, again, the market really kind of ripped off we're going to let's make a deal on the debt ceiling. And then now that it's not going through, the market's just selling off. So, with that being said, looking at tomorrow, like I said, I think it's going to be very volatile. We'll definitely have to see where we open up. We hit the top range of the wedge. We'll see if we'll be down by the 4,100 potentially tomorrow. Again, it really depends on how bad things get, right? Like if, again, the notes reflect recession, is the market going to start pricing in a recession, right? The market is good and can tune some of those things in, but given the current market state, I don't believe we've priced in a recession. I believe we've priced in or tried to time a pivot. That's why we had a lot of volatility last year, which essentially just turned into chop. But nonetheless, a lot of kind of what we're getting right now, because we haven't really determined when that recession is going to be. Now we're getting more recession type data. And so I think we could potentially start pricing in a recession, which could lead to a big downfall. And again, if we do default, that you could potentially take 30 to 40% off the top of stocks where they're already sitting. Could be a strong possibility, and it's going to be one hell of a recovery if that does happen. And just be mindful of that. That's going to have a lot of cascading effects. That's going to break a lot of things, and a lot of people are going to get unemployed, and you're going to lose power in your dollar. like 20% of your dollar, right? And understand that the purchasing power of your dollar is going to go way down if that happens. So this is a big reason why it has to be done, and this is why this is just a political game right now. So we'll see what happens tomorrow. But those notes or report recession again that comes out at 2 p.m. Eastern Standard Time. We'll see what happens there. Again, the 4,200 is still a monster wall. I don't see us breaking back over there. Maybe if we get down to the 4,100, we hear about a potential deal, right? A debt ceiling deal might push us back up to retest the 4,200. I don't really know. If we do break this level here, though, if we do break the 4050 and start heading lower, right, that could be the debt deal. I think would be enough to pump us back up for retest and then sell off. Again, I don't know. There's still a lot of what if scenarios that could happen, but the overall market sentiment is it's still extremely bad. I think we still need to price in a recession before anything else. And then I think we can recover from there. I don't expect us to have a huge boom cycle because in the reality of the situation, everything needs to kind of start getting better. And you need to start seeing that reflection in when you start getting earnings that like massively beat expectations. You have to understand just because we barely are beating expectations and expectations are in the dirt, that's not the turning point. The turning point in the economy is when we massively blow away expectations. If you think like pandemic level, when the pandemic first kicked off, we injected all that money, like people were blown away with the earning statements. That's what I'm looking for. That's when I know the market is going to recover, because I do believe tech being one of them is going to have those massive earnings that we're seeing. And right now we're not seeing that. We're seeing them barely skating by on really shitty expectations. And so again, I think that will come at some point next year. But I think we do need to actually price in recession because it is getting really bad. I'm not even joking. Like I said, people don't want to hear that. You go out in your store and things are expensive. That's inflation. No, it's not. Inflation is all over. I get that. Services is all over. Inflation shifts one thing to the next. It just depends on where the demand is for society at the time. People try to save dollars, and so the demand will shift. But when it shifts, it's a big influx of demand from one thing to the next, and that's where inflation is. That's what's hard to battle inflation, because it's always shifting around. It's never just one particular thing. So with that being said, we'll see what happens there tomorrow. Opening, if we open below the 4140, again, I think we'll head back down to the 4055. Strong possibility. The 4100, like I've talked about, like the 4150 and the 4050 are kind of like the ranges like we play that like the intermediate. We don't really play like the nice round 4K 4100 mark or 4200 mark, although the 4200 mark's kind of been a solid wall. But nonetheless, we've been playing kind of that $50 range, like the 4050 4150 or kind of the things like we've been playing. So they're playing like that 100-point range. And so we'll see what happens and then watch the timing and see how funny it would be if we hit the 4100 and then we have a deal that pumps us up to potentially 4200 and then maybe sell the market off. Who knows? But we'll see what happens there. Bitcoin still holding roughly around the 27. Again, very much dependent on the market there. So still watching that 31K, watching 25K on there to see if we break. Let's take a look at gold. We haven't watched gold in a while. Gold is still holding pretty solid. I think this thing could start pumping back up. We'll see. Again, this is really kind of a recession gauge, is to watch how gold is doing. Unless gold is absolutely flushing, which kind of looks like a bear flag here. But we'll see what happens in the next coming days. Again, this can dramatically change. I mean, you've seen this huge sell-off and this massive rip. Could be a little dip and then massive rip again. Could be strong possibility. We'll see. Palantir. Again, massive wick. We're starting to see that. I had a massive pump today. I had more news today about a new AI program they're trying to introduce that will help them scale. So that's definitely a big thing I like about Palantir. I want this thing to pull back. Kathy Wood keeps buying it, but hopefully it starts selling off some more here, get a gap fill. Like to definitely stack some more of this the further it comes down. But again, we'll see what happens there. Again, if the market starts selling off heavily, it's been a couple days, and something I've talked about, even if they had a killer earnings, they're profitable finally. It looked to remain profitable, so that was a real positive thing. So the big thing with this is just to watch and see. I mean, you can even say this is while I'm talking about it, I can see this ascending wedge here, which is something I always like to point out. We'll see if this is actually going to play out here, but there is quite a bit of a ascending wedge here. So let's see if this plays out and see if it breaks back down to the downside and starts selling off. But we're looking for that gap fill there, so we'll see. Tesla, massive rip and then massive rejection. If you start looking at some of these higher time frames, it kind of makes sense. Right, you had a hard ceiling here at the 212. We haven't made it up that far. We had a break back down and retest at this level here around the 187. If we can remain below the 187, we could potentially start selling off to a new low. Since we broke back down, retest, and then potentially start selling back off. We'll see. We'll see if we see below 100 on Tesla. Again, if we start pricing in recession, I think it's very much a possibility. And I think it's if we do price in a recession, it would be like a month. So let's say June, or could start potentially tomorrow into mid-June or late June. And then from that point, maybe that's where we see bottom reprice in a recession. And then any more impactful news we would get after that, again, depending on how much we try to price in, we could recover. The stock market would recover from there anyway. But again, ultimately understand that because of the fact the Fed are continuing to raise rates, you haven't seen the overall impact of the last about 5 months of rate increases. So put that in perspective, and then understand the more stickier that essentially inflation gets, the more that they will continue to raise rates. And the harder it will get. So much so, like I've stated, I think we won't have much of a pause, if a pause at all, before we actually start cutting rates. I think is a strong possibility, and then go from there. Now, it's not hard to believe that we could start cutting rates and then pause, and then cut rates a little bit more, pause kind of thing. But the last thing we want to do is stop raising rates and being paused only to increase rates again, because then you're going to essentially crater the market just by doing that alone. So we'll see what happens here with Tesla. But so far, it looks like we're could potentially looking for some more downside. Then you got BA today. Again, still playing that range, 220-195. Needs to break out of that, and doing this every single day. You can see there's a lot of consolidation. So whatever move is going to come out of here will be a big move. And for those bull fans out there, the last thing you want is this thing to break down, because it will be a massive move when it does happen. On JPM, so showing a lot of weakness again. Again, a gap fill, needs to hold the 135. I think this is going to fill at least down to the 122. And like I said, we have another gap fill here roughly around the 116 mark. And I do believe we could potentially be heading for that 110 mark ultimately for JPM. Again, we'll have to see on that. GS still looking weak. Bank of America still trading sideways. So we'll see there. But that's pretty much what I got. Again, don't want to make these daily ones put too much info into them, because tomorrow is going to be a big day in general. As long as whatever plays out with Yellen and what comes from those notes. Again, in those notes, I am looking for recession talk. That is what Powell highlighted. I think there will be a lot of recession talk in there. Who knows what else will be in those notes? But that is one of the ultimate thing that I'm looking for. It could be a real shocker, and we could start seeing some major selling. Again, let the market digest what's going on. The initial move might not be bad, or it could be really bad, right? If they're talking about a recession and start getting really hawkish in those notes, could be a problem. I don't think they're going to be extremely hawkish as they continue to raise rates. But I think, if they mention that we are in a mild recession or anything like that, you're not going to hear that directly from Powell, but you will see those in the notes. So with that being said, if you made it this far, I appreciate you. Go ahead and drop a like. Till next time, I'll see you guys later.